S&P 3466 holding on to levels best since September 4th. Let's get to Bob Pisani.
We've had good opens this week, Carl. Again today, almost 5-1 advancing to declining stocks. That's very good considering fairly modest open, up about 18 on the S&P 500. Look at the sectors. And once again, this modest cyclical rally, very evident. Energy was up at the open, but nosedived quickly. Of course, we've got that hurricane in the Gulf. Oil's down today, but banks, materials, industrials, particularly industrials, really the stars. Tech's been lagging all week, although the semis are up this morning on the AMD Xilinx chatter, which is what it is right now. But if you look at the industrials, the real big story here is this plethora of new highs we've been hitting throughout the week and again today. 6, 7, 8 of them, big names: Illinois Toolworks, Eaton, Caterpillar, Deere, FedEx, all at new highs. Big global names here. And this is not a phenomenon that's 2 or 3 days. This is starting to have a little bit of legs. Remember, these rallies have tended to fail in the cyclicals this year. But if you look at the industrials in September, with the S&P up 3%, FedEx up 8%, American Airlines, nice moves on all the airlines, are up 6, 7% on the month. These are more than double the performance of the S&P, Deere, Honeywell, Eaton, as you can see. We're also getting a modest rally in the bank stocks. I know nobody believes it, but actually it's got more than 2 days behind it. This is one of the better rallies we've seen in banks so far this year. These are double-digit gains in all what I call the super regional banks, like Regions and Comerica and KeyCorp and U.S. Bancorp. J.P. Morgan will kick us off on Tuesday on earnings. So the money center banks up about half of what the regional banks are up, but still, again, more than double the outperformance of the S&P 500. The same with the material stocks. There has been hope for some post-election stimulus out there around infrastructure, and you can see this in Martin Marietta and Vulcan up big. The steel stocks are up big. The copper stocks like Freeport are up big. Even DuPont is up big. So you can see this has got a little bit of legs, this cyclical rally. Still, I can't emphasize how confused everybody is on stimulus. Is it a pre-election stimulus? Is it a post-election stimulus? Is it a comprehensive package that we're going to see? Is it a standalone deal? Nobody knows, and there's a lot of confusion. So a lot of people are on the sidelines. The volume is light on the up days and heavier on the down days. What does that mean? It means it's a seller strike. There's not a lot of buyer enthusiasm, and the pain trade is higher because people are on the sidelines. Market drifts up, and people have to kind of get in. The thing that makes me enthusiastic about the fourth quarter is what I'm seeing about the third quarter numbers so far and the fourth quarter. We've had 22 companies reporting, and 20 have beaten so far. The average beat is 25%. That is enormous, way above the normal beat of 3 to 5%. And as a result, many of those companies, the majority, are seeing the fourth quarter numbers increased. So if you want to be bullish on the fourth quarter, this is the main reason to be bullish. The problem is here, guys, you're hostage to the vaccine and the reopening story and potentially to elections, although concerns about any kind of disputed election is now a little bit lower than it was a couple of weeks ago.
Shepard Smith here. Thanks for watching CNBC on YouTube.